Good morning, students. Welcome you all on the second day on India's 38 intangible assets. So, friends, quickly, I'll recap the yesterday's agenda, what we have discussed yesterday on India's 38. So, we talked about India's 38 intangible assets. Intangible asset is a non-monetary, it is an identifiable non-monetary asset without having physical substance. So, this standard is applicable in accounting and disclosure requirement relating to intangible assets. So this standard is applicable to all kind of intangible asset except intangible assets which are taken care by the specific standard like deferred tax asset. Again, it's an intangible resource or intangible asset, but it is covered by Ind AS 12. Financial asset, it is covered by Ind AS 32. Insurance contract asset, it is covered by Ind AS 104. If a intangible asset is held for ordinary course in the business, then it will be covered under Ind AS 2 inventories. If intangible asset is held for sale, then it will be covered under Ind AS 105. Then we discussed if intangible asset, if an asset is a mix of tangible and intangible, then you need to see, for example, for operating software or Microsoft Windows. So Microsoft Windows is important for any hardware or any laptop or a computer. So that is why it will be considered as an integral part of the hardware. And that is why this Microsoft Windows should not be capitalized separately, and it will be part of the computer and laptop, and computer and laptop will be capitalized as a property, plant and equipment. Okay. So friends, then we discussed that we discussed the definition of asset also, and we find that for an intangible resource to become an intangible asset. So why I am calling the word intangible resource? Because even this advertisement expenses, even this promotional expenses is again an intangible resource. So you are incurring some expenses and you will receive some future economic benefit in future. Okay. But whether every intangible resource is an intangible asset, we need to see three criteria. One is future economic benefit. You need to see the control aspect. You need to see the identifiability aspect. In identifiability aspect, we discussed that identifiable means either it is separable or it is arises from legal or contractual rights. Okay. For example, if a license is not separable because the government is stopping you from selling, renting out, transferring that particular license, but government has given you that license for a period of, let's say, 10 years. Okay. And by using that license, you can enjoy the fruits, you can enjoy the future economic benefit. You can stop others also by accessing that license which government has granted to you. Okay. So there is a legal or contractual right attached to that license which government has provided, and hence it is meeting the second criteria of making it identifiable. Okay. So we have discussed this three part in detail for making an intangible resource to be an intangible asset. Friends, then we discussed measurement and recognition, and we discussed that for getting an item recognized under Ind AS 38 intangible asset, there should be three conditions. Two conditions we are aware of. One is future economic benefit should be probable. Second, cost can be measured reliably. What is the third condition? Sir, we learned these two conditions even in the earlier standard also, in PPE standard, in your investment property standard. The third condition is it is meeting the definition of intangible asset. And what is the definition of intangible asset? Identifiable non-monetary asset without having physical substance. Okay. So it should be without physical substance. Then we discussed that initially intangible asset has to be measured at cost, but of course, sometimes it may be at fair value also. It depends on the mode of acquisition of intangible asset. We discussed intangible asset can be separately acquired. Okay, like you have entered into a contract with Infosys or TCS, wherein you are acquiring a software or you are getting a software developed from these outsourced company, these external agencies. So in that case, we discussed that intangible asset has to be measured at cost. Okay. And what is the definition of cost? What is the inclusion of cost? Cost includes your purchase price. Please remember these concepts were there in Ind AS 16 also. So one tip I want to give you, that if you will read these concepts in comparison to other standard also, it will find you more benefit. It will give you more benefit. You will find it more useful, because the time you're reading intangible asset, you are also doing a revision of property, plant and equipment, revision of investment property. Okay. So like Under property, plant and equipment, cost include purchase price. Here it is also purchase price. There import duty was there. Here import duty is also there. Okay. Non-refundable taxes were there. Here also non-refundable taxes were there. Okay. Minus trade discount and rebate. Same. It was there also. Plus directly attributable cost. It was there also. In property, plant and equipment, dismantling cost was also there, since it is not having a physical substance, and hence under intangible asset, third leg of dismantling cost is not there. Okay. So what is meant by directly attributable cost? Directly related to asset, which includes your professional fees, cost of employee benefit, cost of testing. What is not allowed to be included in the cost? Your advertisement cost, promotional cost, your abnormal cost, your general overhead and administration cost, training cost. So these are not allowed to be capitalized. Initially operating losses, these are not allowed to be capitalized. So we talked about separate acquisition. Then we discussed exchange of assets. If one asset is acquired by sacrificing or by giving another asset. Okay. So if you are acquiring an intangible asset in the mode of exchange of assets, then the intangible asset acquired has to be recognized at fair value. Now the question arises, which assets fair value? Is it asset acquired fair value, or is it asset given a fair value? So standard says that whichever fair value is more realistic, more evident, means, for example, fair value of asset acquired is there, but fair value of asset given up is not there. In that case, fair value of asset acquired is a cost which is required to be recognized for that asset acquired. If the fair value of asset acquired is not reliably measured, but the fair value of asset given up is reliably measured, in that case, the cost of asset acquired is equal to the fair value of asset given up. If both the fair values are reliably measured, in that case, you need to consider fair value of asset given up. So we have done an example of Sun Limited and Earth Limited from the Institute study material. Then we discussed, after exchange of assets, we discussed business combination. And in business combination, we discussed that when an acquirer acquire any business, okay, and if he is paying a premium, if he is paying more than the net assets, more than the fair value of the net assets of the acquiree, in that case, the differential will be, so far we have learned differential will be goodwill, but here it will not be goodwill. You need to see what are the other intangible assets for which the acquirer is paying extra, for which the acquirer is paying premium. Remember, we have discussed a case study of Facebook and WhatsApp. Okay, so in that case, if there are any other intangible assets, those intangible assets are recognized at fair value, even though those intangible assets were not in the books of acquiree. But since you are paying for those intangible assets, you need to recognize that. So over and above of those intangible assets, it will go to goodwill. So we have also done a case study on this part. Then we discuss government grant. If government has given you intangible asset by way of a grant, okay. So if government has given free of cost, you can recognize your intangible asset and grant at fair value. Or if government has given on concessional rate, so you can recognize your intangible asset at nominal cost, whatever you have paid, plus any transaction cost. Okay. So this will be the cost of the intangible asset acquired in a government grant mode. So we have discussed all these stuff in the last class, and we have also discussed about internally generated goodwill. So we discussed internally generated goodwill is not meeting these three criteria. Okay, it is not meeting the identifiability criteria, and hence Ind AS 38 prohibits recognition of intangible asset, recognition of internally generated goodwill as an intangible asset. But when you are paying to acquire a company and you are paying for the goodwill for that company, you can recognize that. So goodwill, it will be considered as a purchased goodwill. So purchased goodwill in business acquisition is recognized, is allowed, but internally generated goodwill is not allowed. So this is something which we have discussed in the last class. So let me look at the query box. If you have any query from the last class, I'll discuss. Otherwise, I'll move on to the next concept. Okay, great. No any queries so far. I hope audio and video both are clear. Yes. So now, in the mode of acquisition of intangible asset, now I'm discussing a very important concept. So this is the sixth part of mode of acquisition. Internally generated intangible asset. So yesterday we have discussed internally generated goodwill. Now we are discussing internally generated intangible assets. So this may be important little bit from a theoretical aspect also. This may be important. Okay. What is meant by internally generated good intangible assets? If I talk about pharma companies, if I talk about pharmaceutical companies, and in the today's environment or in the today's scenario, so these pharma companies have a very good example of internally generated intangible assets. Okay. So these pharma companies are doing a lot of research on this COVID vaccine. Okay. And when this COVID vaccine will be launched by any pharma company, so they will have a huge benefits. They will have a huge future economic benefits. Okay. So if you will see the share price of the pharma companies since February or March 2020, so the price have increased substantially. Okay. So these pharma companies are doing a lot of research in these areas. So every pharma company is doing a lot of research in these areas. If I talk about internally generated intangible assets, so how this pharma company works. So pharma company have a lot of scientists, doctor who are engaged in the development of a particular salt, development of a particular vaccine. Okay, development of a particular vaccine and salt. So when they have identified, yes, now we have successful, or now there is a technical feasibility that this product will be successful. Okay, then they get the salt patented by the drugs authorities. Okay, whenever you purchase a medicine, so there is a salt which is written in the medicine. Salt doesn't mean namak. Salt means component, constituents of that particular medicine. For example, you are buying a paracetamol 625 mg. So when you see on the back of the paracetamol, it is written that so much of sodium, so much of this is included in this particular drug or in this particular medicine. Okay. So friends, if I'm talking about internally generated intangible asset, so generally when you are developing an intangible asset, it will run through two phases. Okay, it will run through two phases. Can you tell me what are those phases? Although we have learned this concept in accounting standard 26 also. Can any of you tell me what are the two phases of internally generated intangible assets? What are the two phases? Any clue? Ambika? Pujita? What are the two phases of internally generated intangible asset? Rohan? Okay, yes. So there are two phases of internally generated intangible asset. Research phase and development phase. Research phase and development phase. Research and development. Am I right? Research phase and development phase. Okay. So the first phase is research phase. What is meant by research phase? Research phase means the company is doing a lot of research. The company is acquiring the knowledge. So research phase means acquisition of knowledge. Research phase means acquisition of knowledge. So the scientists were just experiencing, the scientists were just researching what is the basis of this corona, what is the basis of this corona, so how does it spread. Okay, so what are the antibodies of this corona, so how this corona can be killed. Okay, so they are just understanding about this corona. Okay, so what are the symptoms, what could be the probable symptoms. Okay, so acquisition of knowledge, they were just acquiring knowledge, acquisition of knowledge. What is the development phase? Development phase means application of knowledge. Application of knowledge. So the definition is something else. Just for the sake of understanding the layman language, let me tell you, research means acquisition of knowledge and development means application of knowledge. Okay. So research is something where you are acquiring the knowledge, where you are acquiring the knowledge, where you are hitting your head and getting the knowledge, that what could be the probable scenario, so what could be the resolution, what could be the solution. Okay, so you're just acquiring the knowledge. And once you demonstrate that yes, now I have acquired a knowledge and now I can apply my knowledge for the future economic benefit, so that is known as a development phase. That is known as a development phase. So let me take a classic example of our chartered accountancy. Okay, so you guys are CA students, you guys are CA students. Okay, so what you are doing as of now, you are acquiring a knowledge. You are acquiring a knowledge. When you become a chartered accountant, you will apply your knowledge. You can demonstrate that now, yes, now I can earn future economic benefit. Now I can sign the certificates. Now I can sign the audit report. Okay. So whenever you become a chartered accountant, the day you become a chartered accountant, your development phase has been started. Okay. The day you become a chartered accountant, your development phase will be started. Your development phase will be started. And from the development phase, for any internally generated intangible asset, okay, the development phase expense should be capitalized. The development phase expense should be capitalized. Okay. And the research phase expense should be charged to P&L. And the research phase expense should be charged to P&L. Okay. Any doubt here? Why, sir? Why research phase expense has to be charged to P&L? Because the time you are researching, it means you are not aware whether you will be successful or you will not be successful. Okay, all the research will not always be fruitful. All the research will not always be successful. Okay, for these pharmaceutical companies, the scientists and doctors are engaged into many research. So every research will not be successful. Okay. So first you need to demonstrate, yes, we have reached at an advanced stage where we can say that we will be successful. Okay. So from that date, development phase will be started. So have you understood these two terms in the layman language? Now, after that, I'll take you to the complexity level. Pujita, Vebhuvi, Ambika, Gomati, Kaustav. Is it okay now? Is it okay now? Let me see the query. Okay, perfect. Okay, guys, great. So, internally generated intangible assets, as far as these are concerned, so I have taken an example of pharmaceutical companies. You can take an example of IT companies where they are engaged in development of a software. Okay. So if you will see the balance sheet yesterday, I have talked about some companies, and if you see the balance sheet of Infosys, is having a research and development intangible asset in the tune of 7,000 crores. 7,000 crores, 7,000 crores. Okay. So what is these expenses? This Infosys is engaged into the development of software. Okay. So friends, generally in automobile companies, in some big manufacturing companies, they are engaged into the curtailment of cost. Okay. So they are engaged into the efficiency. They are engaged into the reduction of production time. Okay. So they have already started a pilot project. They have started a project that by how we can reduce the cost, we can minimize the NVS. Okay. We can increase our efficiency time. Okay. For that they are running a project. Okay. They are running a project. So whenever they say that now the time has come when we can demonstrate that yes, this project will be successful. So the time from that period will be capitalized as a intangible asset. Okay. That can be capitalized as an intangible asset, as a technical know-how. Okay. So the layman thing is research phase and development phase. Research phase means acquisition of knowledge. Development phase means application of knowledge. Research phase expense will go to P&L, and development phase will be capitalized. Okay. So now I am taking you through my PowerPoint presentation. Then I'll move on the complexity part. But don't worry, it is not complex. I'll explain with the help of an example so that everything will be clear. Yes, is it visible? Whether the screen is visible? Okay. Cost of screen is visible? Okay. So friends, if you look at this PowerPoint presentation, it says that internally in the left side, the mode of acquisition is internally generated intangible asset, and in the right side, recognition is there. So it says that segregate into research phase and development phase and charge all expenses related to research phase to P&L. Okay. And it says that development costs are capitalized. So I have told you, when you reach at the development stage, the moment all the future expenses will be capitalized, it will be capitalized as an intangible asset under development. Okay. And when that product will be launched, that intangible asset will be launched, okay, or when that intangible asset will be available for use, so that time this intangible asset will be capitalized. Otherwise, before that, development cost will be capitalized as a development cost, CWIP. Okay, intangible asset under development. Okay, so it says that development costs are capitalized if an entity is able to demonstrate. Okay. So it says that now the question arises, sir, when we consider that the development phase will be started. So standard has given you 6 conditions. Okay. It says that if you will satisfy all these 6 conditions, then we can say the development phase has been started. If you can satisfy all these 6 conditions. What are the 6 conditions? Technical feasibility should be demonstrated for any project. First of all, you need to see whether the technical feasibility is there, whether are the companies sure that this product will be feasible, this product will be technically feasible. Okay. Intention to complete the intangible asset and use or sell it, whether the company has an intention to complete the intangible asset, or the company wants to forego this particular research which it has been incurred so far. Okay. Ability to use or sell the intangible asset, then you need to see whether the company is able to use or sell the intangible asset, whether the ability is there. For example, the pharmaceutical companies are engaged in the development of COVID vaccine. Okay. And Government of India has announced that this COVID vaccine cannot be sold by any Indian companies. Just I'm taking a hypothetical example. Okay. So in that case, although that COVID vaccine formula may be technically feasible, intention to complete or use was there, intention to sell was there to earn future economic benefit, but the company is not able to use or sell the intangible asset. Okay. So by way of a law or by way of a contract, for example, somebody has stopped you by using or selling that intangible asset. It means the company is not able to use or sell the intangible asset. So ability to use or sell the intangible asset has also been demonstrated. Okay. How the intangible asset will generate probable future economic benefit. So you need to also demonstrate that future economic benefits are probable. Yes, this intangible asset, when it will be available for use, it will provide future economic benefit. Adequate financial, technical, and other resources to complete the development. Generally, this internally generated intangible asset process is a long process. So you need to see whether the company has enough resources, whether the company has enough financial resources to fund that development. Okay. For example, whether the company has sufficient technical resources like doctors, engineers, scientists. Okay. Whether the company has sufficient financial resources to fund that development project. So you need to, as an auditor or as a management, you need to demonstrate that also. What is the projected cost to get this intangible asset completed. So that point should also be noted. Ability to measure the expenditure attributable to the intangible asset. And what is this? This is cost reliably measured. This is reliably measurement of cost. Reliably measurement of cost. Okay. So, sir, these 6 conditions are there. So, as a student, how can I learn this 6 condition? How can I learn this 6 condition? Okay. Any shortcut? Anything? Any formula by which I can learn this 6 condition? Okay. So, just for the as a student, just for your memory, because this is a very important concept which can ask as a theory also. As a theory, I mean to say, institute can ask, this is an intangible asset under development. This is an expenditure incurred on research. So this date, the research was there. This date, development has been started. So you need to demonstrate what are the different conditions for development, okay, and how this has to be treated. So friends, please remember this concept. Development phase will be started when all when all below conditions are satisfied. When all below conditions are satisfied, okay. When all below conditions are satisfied. Yes, Ambika, in development phase, we need to estimate future economic benefit. We need to estimate the projected revenue. Okay, we need to estimate the projected reduction in cost. So, friends, I am giving you a small mantra to learn this. P I R A T E. What is this? Have you seen a movie, Pirates of the Caribbean? Pirates of Caribbean. Have you seen that movie? So what is this? This is pirate. This is pirate. P-I-R-A-T-E. And what this pirate stands for? P stands for probable future economic benefit. So future economic benefit should be probable. Sir, we have already understood that for capitalizing or for recognizing any asset, future economic benefit should be probable. Am I right? So what we are doing here, we are saying in the development phase, we will capitalize all the cost of intangible asset. Okay, we'll consider this as an intangible asset under development. Okay. So this is the probable future economic benefit concept. This is probable future economic benefit. If future economic benefit should be probable. Sir, we need to see whether the management is intended to complete the asset. So what is I? What is I? I stands for intention to complete. I stands for intention to complete the asset. Intention to complete the asset. Okay. Intention to complete the asset. So in the real estate business, I'm just taking a separate example to throw some light on you to understand this concept. Sometimes in the real estate business, you can see a lot of uncompleted projects, okay, on which there is no progress going on since last 3 years, 4 years, 5 years. You can see a lot of real estate projects which are under CWIP, and there is no progresses on those long-term projects, okay, on those real estate projects. So likewise, if a company has started a research and development, if a company has started a research and the company is demonstrating that yes, my project will be successful, you need to see whether the company has an intention to complete the asset. You need to see that also. Okay. If, for example, the management has acquired, so a company has acquired another company, or there is a change in the management, there is a change in the top level management. So whether the new management wants to complete the asset or wants to scrap those research expenses, wants to scrap those projects. So you need to see the intention to complete the asset. Okay. What is R? R stands for, what is R? R stands for resources. Resources. Whether the company has adequate resources to complete the asset. Resources means technical resources, financial resources. So technical, financial. Okay. Enough funds to fund the project. Okay. What is A stands for? What is A? What is A? Ambika. What is A? A does not stand for Ambika. I need to say here. What is A, Ambika? Costa, what is A stands for? What A stands for? Ability. A stands for ability. Ability to use. Ability to use or sell it. Ability to use or sell it. Okay. What is T stands for? What is T stands for? What is T? Technical feasibility. Technical feasibility needs to be demonstrated, whether this will be feasible or not. Okay. You know, whenever any project started in from the government side, they ask for a feasibility report from a consultant. Okay. What is feasibility report? For example, they have to build a road. They have to build a road between 2 points. For example, they have to build a road between Delhi to Agra. Okay. So are you aware about the Yamuna Expressway? So there was a Yamuna Expressway which was constructed by JP Industries from Delhi to Agra, let's say. So first of all, before taking this into the mind, they will go for a consultant and ask for a feasibility report, whether constructing a highway for 200 kilometers will be feasible. It means how many encroachment are there which needs to be removed. If there are some houses, there are some offices, there are some, you know, already life is there, some establishments are there. So we need to remove all this stuff. Okay. So they ask for a feasibility report, whether this project will be feasible or not. Okay. So we need to demonstrate the technical feasibility, whether this development project, this salt, this vaccine, this research will be successful or not. So technical feasibility needs to be demonstrated. Technical feasibility. I would request all of you to please write down this, because you will not get this in the standard or in the study material. Okay. And this is very easy way for learning this 6 condition. And sometimes in the examination, you can get this condition to be asked in the form of an analysis. Okay. And E stands for, what is E stands for? What is E stands for? You're right, Ambika. E stands for expenditure. E stands for expenditure reliably measured. Expenditure reliably measured. Reliably measured. Sir, 2 conditions are very simple. We are already aware about these 2 conditions. Probable future economic benefit and cost can be measured reliably. These 2 conditions are part of every recognition of an asset. Am I right? So P stands for probable future economic benefit. E stands for expenditure reliably measured. Okay. So for example, you are the auditor of a Ranbaxy Limited. Ranbaxy is engaged into the research of a COVID vaccine. So you will go to the management of Ranbaxy, and Ranbaxy has already expensed around 100 crores for the research of this COVID vaccine. Now Ranbaxy is saying, now we want to capitalize this expense. Okay. From this year, we want to capitalize this expense. You will ask 6 questions. You will ask with the management or the CFO of Ranbaxy, sir, please tell me what are the probability of future economic benefit. So we'll ask for a budget. You will ask for a forecast. You will ask for an estimation. Sir, how do you estimate if this project will be successful? For example, you are saying this project will be successful, you want to capitalize the development cost. So what is the probable future economic benefit? So he will say, in India, around 1 crore cases are there. So I mean to say 1 crore people are infected as of now. Although the active cases are 4 lakh or 5 lakh, but the way this disease is growing, and India is a big market for this. Big market for this, I mean to say. India has a population of 1.3 billion. India has a population of 130 crores. Okay. So at least we are estimating that if we'll cater these at least 10 crore people in the next few years, so this will be my projected revenue. Okay. Then you are asking the question, sir, are you intended to complete the asset? He will say, yes, even we have discussed this agenda in the board meeting also, and the entire board is willing to complete this project as soon as possible, because the government of India, Prime Minister Mr. Narendra Modi is also pushing for it, and there is no vaccine came as of now from the entire globe. Okay, and this vaccine does not impact only India. As far as market is concerned, this will also give benefit to the entire world. Okay, so R stands for resources. So then I have asked a question. So Ambika went to the auditor of that company, and Ambika has asked the third question. Sir, have you enough resources for that? So the CFO told, Ambika, you are doing our audit since last 3-4 years. You see, we are a cash-rich company. Okay, so we have 100 scientists on board. We have 200 doctors on board, and we have enough research laboratories located in this area. Okay, and we are doing pretty well in the market. Okay, so Ambika is satisfied about probable future economic benefit. Ambika is okay with the intention to complete the asset. Ambika is also okay with the resources as far as technical and financial are concerned. So Ambika then asked, sir, will you able to use or sell the asset? Then CFO asked, Ambika, do you find it difficult? Is there any law which is stopping me from using or selling that asset? Okay, so yes, I will be able to use or I will be able to sell that asset. Okay, then Ambika is satisfied. Then Ambika asked for technical feasibility. Sir, what will be the technical feasibility of this vaccine? Is it whether it will be feasible? CFO said, yes, it is feasible. We have already prepared a memo around that. We have already established this fact in our board meeting. Okay, perfect. Then Ambika says, sir, whether the cost can be reliably measured. Are you tracking these expenses separately? Then CFO says, yes, we have a separate cost center for this particular project, and we are parking that project in that particular we are parking the cost in that particular project. So we have a separate scientist, we have a separate doctors, we have a separate employees who are already engaged in this particular project, and we are managing the entire cost sheet for this particular project. Yes, cost is also reliably measured. So Ambika is happy with these all the 6 conditions, and then Ambika has demonstrated that yes, from this particular date you are meeting the development phase condition, and now going forward all the expenses will be capitalized. Guys, is it okay? Shall I move ahead? Ambika, Usha, Pujita, Kaustav, Gomati, is it okay? Shall I move ahead? I hope you are clear on this part. Let me know if any doubt is there. Pirate. Will you able to remember the pirate in your examination also? P stands for probable future economic benefit. I stands for intention. Just remember the first word. So probable future economic benefit, intention, resources, ability, technical feasibility, and expenditure. It would be great if you will respond quickly. Okay, great. Great, guys. Everyone has responded. Absolutely all right. Yes. So now I'm again putting on my PowerPoint presentation. I hope it is visible to you guys. Yes. So we discussed about the sixth condition, and when the sixth condition will be satisfied, development cost we can be capitalized from that particular date. If not able to distinguish between research phase and development phase, sir, if the company is not able to identify is it a research phase or a development phase, then treat the expenditure as research phase and expensed off. Then that expenditure is required to be treated as a research phase expense, not a development phase expense. Okay. So the benefit of doubt will go to research phase. In that case, you will not be able to capitalize. You have to charge it into the P&L. Okay. Cost of internally generated intangible asset is the sum of expenditure incurred from the date when the intangible asset first meet the recognition criteria. Sir, what does it mean? What does it mean? It means it says that for example, the company has started researching this COVID vaccine formula from 1st January 2020. Okay, so this was started from China in December 19, and that is why it is termed as a COVID-19. Okay, so in January 20, the company has started researching on the formula of this particular COVID vaccine. So they have incurred some expenses. Okay, and on 1st April, so after doing a research of 3 months, so till 3 months they have incurred a cost of rupees 20 crores. And on 1st April 2020, they have demonstrated that yes, 6 conditions are satisfied. Okay, and till 31st March 21, they have expensed 50 crores. They have incurred an expense of 50 crores. Okay, so in this case, 20 crore will go to P&L and 50 crore will be capitalized as an intangible asset, CWIP, intangible asset under development. Okay, till 31st March 21. So 50 crore needs to be capitalized, 20 crore will charge to P&L. So it says that cost of internally generated intangible asset is the sum of expenditure incurred from the date when intangible asset first meet the recognition criteria. So in this case, intangible asset first meet the recognition criteria on 1st April 2020. Internally generated goodwill shall not be recognized as an intangible asset because it is not an identifiable resource. We have already spoken about internally generated goodwill. So the cost of an internally generated intangible asset is the sum of expenditure incurred from the date when the intangible asset first meet the recognition criteria. We discussed. Prohibit reinstatement of expenditure previously recognized as an expense. Sir, what does it mean? It says that in my example, for example, sir, you have taken an example that the company has started research on 1st January, and the company has demonstrated that the development phase is identified on 1st April. For example, the company has done some error in estimation that the development phase has been started from 1st April 2020. In that case, what will happen? So 1st April 2020, instead of 1st April 2020, it was, let's say, 1st February 2020. Okay. So we have already charged 20 crore in P&L. Now we are capitalizing this 50 crore from 1st April 2020. And when the auditor came on board in May 21 for auditing the financial year 2021, so they have found that this is something where your development cost, where your development phase has been started 2 months back, from 1st April 2020. So it was started from 1st February 2020. Now the standard says that. Now the question arises whether the 20 crore which have been charged to P&L, assuming the 5 crore has been expensed in the first month, which is January, and 15 crore has been expensed in the February and March. So whether that 15 crore needs to be capitalized, because the standard says that if you have already recognized any research and development expenses as an expense, you are not allowed to restate those expenses to be capitalized. Okay. So if you have already expensed of something in the previous years, it cannot be restated. Okay. So in this case, although the development phase would have been started from 1st February, but you need to recognize the development cost expenses from 1st April 2020, because the restatement is prohibited under Ind AS 38. Okay. No capitalization. Now, according to standard, what is not allowed to be capitalized? Cost that do not meet the recognition criteria. What is the cost that do not meet the recognition criteria? Advertisement cost, promotional cost, general overheads, initial operating losses, okay, training cost. These are not allowed to be capitalized. Internally generated brand, for example, Haldiram. Haldiram will come and say, we have started from Kolkata and we have a legacy of 100 years. So we have become a brand, and internally Haldiram is capitalizing its brand. So it is not meeting the identifiable criteria. Okay. So in this case, internally generated brand is not allowed to be capitalized. But for example, Reliance says that I want to purchase Haldiram, and Reliance is paying a premium of 100 crores for Haldiram, okay, as a brand. So in that case, Reliance can capitalize by way of business combination. Reliance can capitalize this brand as an intangible asset, but internally generated brand is not allowed to be capitalized. Mastheads, publishing titles. What is masthead? Masterheads. Like in newspaper, in TV news, there is a headline. Okay, publishing titles, customer list, and similar in substance. These are not allowed to be capitalized if these are internally generated. Internally generated goodwill is not allowed to be capitalized. Cost already expensed as a research phase is not allowed to be restated. Okay. Guys, are we comfortable so far? Shall I move ahead? Are we comfortable? Any problem so far? Please respond quickly. Okay, perfect. Now, this is a case study and you need to answer quickly. I would request to answer quickly. Then I'll do one more case study from Institute study material. X Limited has been developing a new production process, and on 31st October 2006, X Limited has been developing a new production process, and on 31st October 2006, it has been able to demonstrate that it is likely to enjoy future economic benefits from the research. Okay. So on 31st October 2006, X Limited is able to demonstrate that they can enjoy the future economic benefit from the research. Okay. So it means this is the date when, so all other conditions are not given. So we are assuming that this is a date when the development phase have been started. It incurred rupees 50 lakh on this account till 31st October 2006. So they have incurred 50 lakh rupees of cost till 31st October, and 24 lakh onwards up to 31st March 7, and 24 lakhs from 31st October to 31st March, okay, 2007. As on 31st March 2007, it estimates the recoverable amount of know-how embodied in the process at rupees 22 lakhs. What is this know-how? So this is the term for a technology. Okay, so technical know-how. So this is a technical term, technical know-how, which is an intangible asset. So the recoverable amount is given at 22 lakhs. So friends, first of all, before 31st October, the phase was considered as a research phase. From 31st October, development phase have been started. So whatever amount which have been incurred up to 31st October, it will go to P&L. So 50 lakh will go to P&L. And from 31st October to 31st March, 24 lakh will be capitalized. Okay. So 24 lakh will be capitalized as an intangible asset under development. But the recoverable value of this intangible asset under development is 22 lakhs. So it means carrying value is higher than the recoverable value. It means impairment testing is required. It means impairment loss is required to be recognized. So 2 lakh rupees of impairment loss is required to be recognized, and 22 lakh will be carried as a cost of the development. Okay. So this is your answer. Any problem in this particular case study? Any problem? Yes, Ambika, you're right. 50 lakh to be expensed as it relates to research expenses. Costa, what is your view on this? Are we on the same page? Great. Okay. So 7 students have responded a right answer in this regard. Great, guys. So now we'll take a case study from Institute study material. So let me tell you the page number of this. So this is illustration number 13. This is a comprehensive illustration. Illustration number 13, page number, illustration number 13, page number 7.311 of Institute study material. Okay. X Pharmaceutical Limited seeks your opinion. X Pharmaceutical Limited seek your opinion in respect of the following accounting transactions. Okay. Acquired a 4-year license to manufacture a specialized drug at a cost of 100 lakhs at the start of the year. Production commenced immediately. So the company has acquired a 4-year license, okay, to manufacture a specialized drug at a cost of 1 crore. Okay. Then second one is also purchased another company at the start of the year. As part of that acquisition, X Pharmacy Limited acquired a brand with a fair value of rupees 300 lakh based on the sales revenue. The life of the brand is estimated at 15 years. This is a very, very important question and very comprehensive question. It touches upon the various aspects of the mode of acquisition. Okay. That is why I have taken this question here. Spent rupees 100 lakhs, spent rupees 1 crore on an advertising campaign during the first 6 months. Subsequent sales have shown a significant improvement and is expected this will continue for a period of 3 years. It has commenced, fourth point is, it has commenced developed a new drug A. Okay. The project cost would be around 10 crore, 100 lakhs, 10 crore, which is clinical trial proved successful and such drug is expected to generate revenue over the next 5 years. Cost incurred till 31st March 2001 is 500 lakhs. This is 5 crores. Balance cost incurred during the financial year 1-2 is 500 lakhs. It is 5 crores. Okay. Fifth question is, it has also commenced developing another drug B. It has incurred 50 lakh towards research expenses till 31st March 2002. The technical feasibility has not yet been established. You are required to show how the above transaction will be accounted for in the books of accounts of X Pharmaceutical Limited. Let me tell you, this type of question is very important from the examination perspective. Okay, very, very, very important from the examination perspective, where these kind of question may be asked in the analytical part. So 5 points are given. You need to tell the management how this transaction will be accounted for in the books of X. Okay, how this transaction are going to be accounted for. I am giving you 30 seconds for the thought. After 30 seconds, I'll take this question on the whiteboard. Okay. Okay. Let me move to the whiteboard. What is the first question? The first question was acquired a 4-year license. So this is a case of separate acquisition. The company has acquired a license and the cost is 100 lakhs at the start of the year and the production has been started. It means it is a case of a separate acquisition. So this drug license, point number 1. So this is page number 7.311, illustration number 13. Point number 1 says that it's a case of a separate acquisition, and this drug license has to be capitalized. So this drug license is an intangible asset. This is a IA, intangible asset, and it has to be capitalized at 1 crore. Okay, this is required to be capitalized. Second point. What is the second point? The company has also purchased another company. It is a case of business combination, acquisition, amalgamation, purchase, business combination. Okay. Another company at the start of the year. As part of that acquisition, X Limited acquired a brand with a fair value of 3 crores based on the sales revenue. The life of the brand is estimated at 15 years. So again, this is a case of business combination. So this brand, this acquired intangible asset has to be recognized at fair value. Okay. So this brand has to be recognized at fair value. So brand is an intangible asset recognized at fair value. What is the fair value? Fair value is 3 crores. And this 3 crores has to be amortized over a period of 15 years. Okay. Understood? Question number 3. Spent rupees 1 crore on an advertising campaign during the first 6 months. Okay. The subsequent sales have shown a significant improvement and the company is expected that it will continue for a period of 3 years. Okay. So what it says that the company has incurred rupees 1 crore on advertisement campaign. Okay. And yes, the company got the benefit of this advertisement campaign. The sales have been significantly improved. So what do? We will capitalize this advertising campaign. Can we capitalize this advertising campaign? Pujita, what we need to do? What is your view? Costa, what is your view? Ambika, should we capitalize this advertising campaign? This advertising campaign cannot be capitalized. I have told you, advertisement, promotional, training expenses cannot be capitalized. This has to be expensed off. It is not meeting the criteria of identifiable. So advertisement expense. This needs to be go to P&L. 1 crore should be charged to P&L. Okay. Question number 4. It has commenced developing a new drug A. The project cost would be 10 crore. Okay. Clinical trial proved successful and such drug is expected to generate revenue over the next 5 years. So the company has commenced developing a new drug. Okay. So the company has done a research. The company has reached to a development. The project cost is 10 crore. Clinical trial has already proved successful and such drug is expected to generate revenue over the period of 5 years. So future economic benefit is probable, cost can be measured reliably, technical feasibility is there. Okay. Cost incurred till 31st March 2000 is 500 lakhs, which is 5 crore. And the balance cost incurred during the financial year 1-2 is 5 crore. Okay. So in 2001, or let's say till 2001, it is 5 crore. After 2001, it is 5 crore again. Okay. So in this case, what will be the cost of this development? So since this is a development cost, Okay, and development cost needs to be capitalized. So this 10 crore needs to be capitalized. Okay, so the development cost needs to be capitalized. Development cost of 10 crore should be capitalized. This should be capitalized. Question number 5. Okay, so Ambika has given answer for all parts and Kaustav has also given answer for all the parts. Okay. It has also commenced developing another drug B. It has incurred 50 lakh towards research expenses till 31st March 2002. The technical feasibility has not yet been established. So this will be a research phase expenses. This will be a research phase expenses. It will go to P&L. This 50 lakhs will go to P&L. Okay. Any doubt? Any doubt here? So we have covered illustration number 13. Shall I move to the next part? Shall I move to the next part? Yes, Pujita, you are also right. Okay. Guys, now let's move to the next part quickly. So let me tell you, the total time allotted for this particular standard was 6 hours. 2 sessions were there. So we have completed 4 hours and we have completed all the new concept or all the critical concept which was there in days 38. And in the next 2 hours, we will do a revision of Ind AS 1, Ind AS 16 also. So sir, are we going to learn Ind AS 16 in today's class? So don't worry. We will be discussing Ind AS 38 concept only, but we will discussing this Ind AS 38 concept with the help of Ind AS 16, and we will have a revision of Ind AS 16 while discussing this Ind AS 38 concept. Okay, so you will understand this that how this has to happen. So now the next part is we have completed measurement at recognition, we have completed initial recognition, we have completed mode of acquisition. Okay, so now we are discussing measurement after recognition. Measurement after recognition. Measurement after recognition. What is the model of measurement after recognition? What are the 2 models of measurement after recognition? So measurement after recognition means at reporting date. It means after recognizing an intangible asset at reporting date. Okay. So there are 2 models. Cost model and revaluation model. Now quickly tell me, what is this cost model? Quickly tell me, what is the cost model? I want your involvement. I don't want this class to be one side. I want to ask and I want to know whether you are clear on this or not. What is this cost model? Tell me. So Kaustav has given cost and revaluation model. Ambika, Pujita, Rohan, Swati, great guys. Yes, cost model and revaluation model. Okay. Now, what is this cost model? Have you understood this cost model? What is this cost model? What is this cost model? Sir, cost model means we need to carry that cost. We need to carry that cost. So what is the meaning of cost model? In cost model, carrying amount or carrying value CV. Carrying value is equal to cost minus accumulated amortization minus accumulated impairment losses. Accumulated amortization minus accumulated impairment losses. Carrying value is equal to cost minus accumulated amortization minus accumulated impairment losses. Okay. So first of all, it means going by the cost model, we need to carry this intangible asset at cost. Whatever amount we have incurred, whatever amount we have paid to acquire a intangible asset. So we have to carry it at cost. Okay. And the amortization amount should be calculated according to the life of the asset. It could be on the basis of WDV, it could be on the basis of straight line method, it could be on the basis of unit of digit method. Accumulated impairment loss, so we need to calculate the impairment loss also. If the recoverable amount, if the recoverable value is lower than the carrying value, we need to charge impairment loss also. Okay, we need to charge impairment loss also. So this is the cost model. This is the cost model, and the company is allowed to either go for a cost model or go for a revaluation model. Okay, so this is a choice. This is a choice. The company can opt for any model, but whatever model the company has opted, it has to be as per the class of asset. So Ambika, what is meant by class of asset? What is meant by class of asset? Software. So class of asset means the asset is having a similar nature and similar use in the entity's operation. For example, software. So if the company has 6 software and the company is doing a fair valuation or revaluation of one software, the company is required to do the revaluation of all the 6 software. Okay. If the company has 5 patents and the company is carrying 1 patent at a cost price, at a cost model, then the company is required to take all these 4-5 patent at a cost model. Okay. So the choice of cost model or revaluation model has to be done as per the class of asset. It has to be as per the class of asset. So what is meant by class of asset? Same funda. So whatever I am discussing as of now, this needs the same. This needs to be replicated same in Ind AS 16 also. Okay. So for this particular slide, for this particular area, if I write this as a Ind AS 16 property, plant and equipment, this will hold good. Okay. So this choice has to be done as per the class of asset. Okay. So if a single item of intangible asset for a particular class is getting revalued, then the entire class is getting revalued. Second funda, when this revaluation model is opted, an additional line item, an additional line is written in the Ind AS 38, because this intangible asset is something which cannot be seen. So it is difficult to get the fair valuation of intangible asset. So standard says that the revaluation model can be applied only if the active market of intangible asset exists. If the active market of the intangible asset exists, active market. So when the revaluation model will be applied, the revaluation model can be applied only when the active market of the intangible asset exists. Active market. If there is no any active market, then revaluation model should not be applied. Okay, then revaluation model should not be applied. Have you understood this? So friends, in case of revaluation model, what should be the carrying value? In case of revaluation model, what should be the carrying value? Carrying value is equal to revalued amount minus subsequent amortization, subsequent accumulated amortization minus subsequent impairment losses. Because why subsequent? Because this revalued amount will become a cost on that date. This revaluation amount will replace the WDV of that intangible asset. Okay, am I right, Pujita? Great. Great guys. So everybody has well versed with Ind AS 16, Ind AS 40. So everyone has given a right answer to this. Great guys. Okay. So now, sir, what could be the frequency of revaluation? So we understood it very well, but what could be the frequency of revaluation? So as far as frequency of revaluation is concerned, it says that intangible, if you have opted for a revaluation model, intangible assets are required to be revalued at every year end. But if, so we'll go by the class of asset, we understood. So frequency of revaluation, if fair value changes significantly, if there is a high volatility in market prices, if fair value changes significantly, then every year, if it is yes, if it is no, then 3 to 5 years. In that case, because this revaluation, fair valuation will carry a cost also. So there is no point if there is no significant changes in the market prices of intangible asset, then there is no point of incurring a huge cost on the fair valuation of intangible asset. Okay. So if the prices are changing significantly, then every year. If it is not changing significantly, then 3 to 5 years. Okay. Is it okay? Perfect, friends. Any doubt here? No doubt. Great. So, sir, this is the same model which we have discussed in Ind AS 16, property, plant and equipment. Now, I am again repeating a very important concept. Sir, what is the treatment of revaluation surplus? What is the treatment of revaluation surplus? A company has purchased a license. A company has purchased a license. Okay. A Limited has purchased a license on 1st April 2018 for rupees 1 crore. Okay. The company has opted for revaluation model. Okay. I'm not assuming amortization here. Okay. Just for the sake of explaining this particular concept. Revaluation model. The fair value on 31st March 19 is rupees 1.5 crore. The fair value on 31st March 20 is rupees 80 lakhs. The fair value on 31st March 19 is rupees 1.5 crore. The fair value on 31st March 20 is rupees 80 lakhs. Okay. Is it fine? Okay. Now, what is the treatment? What is the impact or what is the treatment? So explain the treatment. Explain the treatment in financial year 18-19 and 19-20. Okay. So let's explain the treatment with the help of the journal entry. Okay. So I'll explain the journal entry. Now, what will be the journal entry on 1st April? What will be the journal entry on 1st April? So journal entry on 1st April 2018. What is the journal entry, Pujita? On 1st April 2018, the journal entry will be license account debit, license intangible asset, license, which is a IA intangible asset, debit to bank account. Amount is 1 crore and 1 crore. Is it okay? Okay. Now, what is the accounting entry on 31st March 19? What is the accounting entry on 31st March 19? This 1 crore become 1.5 crore. So what is the impact of 50 lakhs? License has to be debited. License account debit 50 lakhs to revaluation surplus. Other comprehensive income 50 lakhs. This revaluation surplus will go to other comprehensive income 50 lakhs. Okay. And this other comprehensive income has to be shown separately in the statement of changes in equity. Am I right? Okay. What will be the accounting entry on 31st March 20? So here, this was purchased here. The value become 1.5 CR. Here the value will become 80 lakhs. So how much reduction is there? 1.5 minus 80, 70 lakh. So loss of 70 lakh is there. Loss of rupees 70 lakh is there. So how to treat this loss of rupees 70 lakhs? Guys, quickly tell me what is the answer. Guys, tell me quickly what is the answer. In 31st March 20, what will be the accounting entry? What will be the accounting entry on 31st March 20? So Ambika, Pujita, Kaustav, Ambika and Pujita are right for 1st April 18 and 31st March 19. Now I am asking for accounting entry for 31st March 20. Okay. So Ambika is saying, sir, 0.2 lakh to revaluation reserve. Ambika, I'm not able to understand your reply. So guys, first of all, standard says that if there is a reduction, first of all, when there is an increase in the value, you have credited it into revaluation surplus, other comprehensive income. Whenever there is a subsequent decrease, so you have to adjust first of all with the revaluation surplus OCI. So in this case, there is a decrease of 70 lakhs. So revaluation surplus OCI will be debited first. Revaluation surplus will be debit by 50 lakhs. Okay. Because we need to adjust this from revaluation surplus, which is credited on the OCI side. Then we need to book a loss, impairment loss in P&L. So this will go to P&L, debit 20 lakhs to license. Asset will be credited by 70 lakhs. Okay. This will be the accounting entry. Revaluation surplus will be debited by 50 lakhs, impairment loss will be debited by 20 lakhs, and license will be credited by 70 lakhs. Okay. So Pujita is saying, sir, OCI debit 0.5 crore, P&L debit 0.2 crores, and license credit 0.7 crore. Yes, Pujita, you're right. Kaustav is saying, sir, to the extent of 50 lakh, it is debited from OCI and balance 20 lakh will charge to P&L. You're right, Kaustav. Great, guys. Okay. So whenever there is an increase, whenever there is a first time increase, it will go to OCI. Whenever there is a subsequent decrease, to the extent amount balance remaining in OCI, you need to adjust from that. If the decrease is over and above of increase, it will go to P&L. If it is a first time decrease, it will go to P&L. And if there is a subsequent increase, so to the extent we have debited in P&L, we need to credit the P&L. And over and above that will go to other comprehensive income. Okay. Perfect. Now, second concept is, what is the treatment of? So we have understood the treatment of this revaluation surplus. Now, where this revaluation surplus will be utilized. Where this revaluation surplus will be utilized. So utilization of revaluation surplus. Utilization of revaluation surplus. Utilization of revaluation surplus. Okay. So first of all, this revaluation surplus can be utilized the first when the asset has been derecognized. When the asset has been derecognized or asset has been disposed of. When the asset is derecognized, it will directly transfer to retained earnings. It will directly transfer to retained earnings. Okay. So what is the accounting entry? If there is a revaluation surplus which is existing, so revaluation surplus debit, revaluation surplus debit to retained earning. This will be the accounting entry. Okay. This will be the accounting entry. The second one, if the asset is in use, when the asset is in use, asset is in use, then what will happen? Then what will happen? In that case, the retained earnings, sorry, the revaluation surplus will be transferred to retained earning. So this is a balance sheet to balance sheet entry, and this is also balance sheet to balance sheet entry. The revaluation surplus will transfer to retained earnings over the remaining life of the asset. But how much amount? How much amount needs to be transferred every year? How much amount? So the amount is, so revaluation surplus will transfer to retained earning over the remaining life of the asset to the extent of excess amount, to the extent of excess depreciation, excess amortization. So in the context of intangible asset, we will not say depreciation, we will say amortization. Although the substance is same, but as far as intangible asset is concerned, we'll say it as a amortization. Okay. So revaluation surplus will be transferred to retained earning over the remaining useful life of the asset to the extent of excess amortization. Now, how the excess amortization will be calculated? How the excess amortization will be calculated? EA stands for excess amortization, is equal to, excess amortization is equal to amortization on revalued amount, amortization on revalued amount minus amortization on revalued amount minus amortization on actual amount. What does it mean? What does it mean? Same concept which we have discussed in India 16. For example, the life of the asset is 15 years. Okay. The life of the asset is 15 years and the cost of the asset is 15 lakhs and the revalued amount is 30 lakhs. Okay. So how much amount has gone to revaluation surplus? 15 lakh. So the 15 lakh become 30 lakhs. So 15 lakh have been increased. So revaluation surplus is 15 lakh. Okay. So now the life is 15 years. So what was the earlier depreciation? 15 lakh divided by 15 is equal to 1 lakh. What is the revised depreciation? What is the revised amortization? 30 lakh divided by 15 is equal to 2 lakh. So 2 lakh minus 1 lakh is equal to 1 lakh. So every year the company may transfer this revaluation surplus to retained earning to the extent of rupees 1 lakh. Entry will be revaluation surplus debit to retained earning 1 lakh. In the P&L, entire 2 lakh rupee will be charged in the P&L. So entire depreciation or amortization on the basis of revised amount will be charged to P&L, but the company may transfer this revaluation surplus to retained earnings every year to the extent of revised amount minus original amount. Okay. 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 Any doubt? Yes, Ambika is right. She is saying only to the extent of excess amortization. Yes, you are right, Ambika. So friends, now I'm moving on to my presentation. So we have discussed this part, subsequent measurement. The company can choose either cost model or revaluation model as its accounting policy. If an intangible asset is accounted for using the revaluation model, all the other assets in its class shall also be accounted for using the same model unless there is no active market for those assets. Accounting policy should be applied to the whole of a class of intangible asset and not merely to individual asset within a class. Okay, so it should be, there will not be any cherry pick choice. So if one asset is getting revalued, entire class is getting revalued, until and unless the exception is if an active market does not exist for a particular intangible asset. Okay, the company can choose either cost model or revaluation model as its accounting policy. Cost model means carrying amount is equal to cost minus accumulated amortization minus accumulated impairment losses. After initial recognition, an intangible asset is to be carried at revalued amount being its fair value on the revaluation date. And according to revaluation model, carrying amount is equal to revalued amount on the date of revaluation minus subsequent amortization minus subsequent impairment losses. For revaluation under Ind AS 38, fair value shall be determined by reference to an active market. If a single item of intangible asset is revalued, then the entire class of intangible asset to which the item belongs shall be revalued unless the active market does not exist. Class of asset, a grouping of asset of a similar nature and used in an entity's operation. Valuation, frequency of valuation. Valuation need not to be performed every year or every reporting period. It has to be performed at sufficient regularity so that carrying amount does not differ materially from the fair value. Where movement in the fair value, where the movement in the market prices are volatile and significant, then frequent, where movement in fair values are volatile and significant, frequent revaluation is required. Otherwise, the revaluation may be done at an interval of 3 to 5 years. Okay. Then we discussed revaluation gains and losses. What is the treatment of revaluation gains and losses? If there is a first time increase, it will go to revaluation reserve OCI. When there is a first time decrease, it will go to P&L. When there is a first time increase and again subsequently there is an increase, again it will go to OCI. If first time increase, subsequent decrease, first adjust from revaluation surplus OCI, then excess will go to P&L. If there is a first time decrease and subsequently decrease, again subsequently will go to P&L. But first time decrease and subsequent increase, so first credit to the P&L to the extent of earlier debit, then remaining will go to revaluation surplus. Transfer from revaluation surplus to retained earning are made in the following circumstances and are not made through profit or loss. When the asset is derecognized, accounting entry will be revaluation surplus to retained earning. And when the asset is used, in that case, difference between revised depreciation minus original depreciation, original amortization will go to will go to retained earning, revaluation surplus to retained earning. Okay. So we discussed this part. Let's do this case study, illustration number 10 from the Institute study material. Saturn Limited acquired an intangible asset on 31st March 2001. Illustration number 10, page number 7.297. Page number 7.297. Saturn Limited acquired an intangible asset on 31st March 2001 for rupees 1 lakh. The asset was revalued at rupees 1,20,000 on 31st March 2002 and 85,000 on 31st March 2003. Jupiter Limited acquired an intangible asset on 31st March 2001 for rupees 1 lakh. The asset was revalued at 85,000 on 31st March 2002 and rupees 1,05,000 on 31st March 2003. Assuming that at the year end for both the companies is 31st March and that they both use the revaluation model, you are required to present how each of these transactions should be dealt within the financial statement. Explain the treatment for revaluation of intangible asset. Ignore computation of amortization on them for the ease of understanding. Yes, what would be your answer? Have you understood this illustration number 10? Very simple illustration. Costa, what is the answer? Ambika, Vaibhavi, Pujita, what is the answer? Nanda, what is the answer? Rohan, Swati, Varun, Shreyansh. Okay, so let me solve this question on the whiteboard. I hope you have gone through with the question and even you have done the competition also. Saturn Limited and Jupiter Limited, two conditions are there. So two situations are there. Saturn, Jupiter Limited. Okay. So 31st March 2001, on 31st March 2001, what was the value? It was 1 lakh. On 31st March 2002, on 31st March 2002, the value was 1,20,000. On 31st March 2003, the value was 85,000. Okay. And in case of Jupiter Limited, on 31st March 2001, on 31st March 2001, the value was 1 lakh. On 31st March 2002, the value become 85,000. And on 31st March 2003, the value become 1,05,000. Yes, what to do now? What to do? So in this case, in case of Saturn Limited, this 1 lakh will become 1,20,000. So in 2002, 20,000 will go to OCI. Okay. So revaluation surplus. This 20,000 will go to revaluation surplus. So revaluation surplus will go to OCI in the balance sheet. Okay. So in the P&L, it will shown in the OCI and it will go to reserves. This 20,000. So 20,000 will go to revaluation surplus. On 31st March 2003, this 120 become 85,000. So loss of 35,000 has to be recorded. So out of 35,000, this revaluation surplus. So out of 35,000 of loss, 35,000 loss, 20,000 to be charged from OCI. 20,000 debited from OCI. It has to be debited from OCI. And 15,000 will go to P&L. 15,000 will go to P&L. Okay. So 20,000 will be debited from OCI. 15,000 will go to P&L. Okay. Now, in case of Jupiter Limited, this 1 lakh become 85,000. This 1 lakh become 85,000. Then what will happen? So 15,000 by to the extent of 15,000, it will be debited. So loss will go to P&L. Loss of rupees 15,000 will go to P&L. It will go to P&L. Okay. Loss of 15,000 will go to P&L. Subsequently, there is an increase. Subsequently, there is an increase of how much amount? There is an increase of 85 to 1,05,000. There is an increase of 20,000. So out of loss of 15,000 debited to P&L, we need to credit P&L. So 20,000, for this 20,000 increase, 15,000 should be credited. 15,000 credit to P&L. Okay, and 5,000 will go to OCI. 5,000 will go to OCI, other comprehensive income. Okay. Perfect, Kaustav. You're right, Ambika. Any doubt so far? Shall we move on? So we have not considered the impact of amortization, but of course, if the useful life is given, you have to calculate the carrying value. So these are the carrying value. So basically, these are the fair value. You need to compare the carrying value with the fair values. So in case of useful life is given, you need to compute carrying value at every year end. Okay. Then you need to compare those carrying value with the fair value. Okay. So friends, it's 8:40 now. 8:40 now. So let's have a break for 10 minutes. After that, we will move on to the next concept of useful life, which is a very, very, very important concept from the intangible asset perspective. Okay. So till now, just post your query. If you have any query, just post that query. Kaustav is saying, sir, what is the meaning of note given after the solution? How the amount will be different? Okay. So Kaustav, after the solution, the note is given. The above amount will be different if amortization of intangible asset is taken into consideration. Of course, I have told you, Kaustav, if you will charge the depreciation on these values. Okay, for example, this on 31st March 2001, the cost is rupees 1 lakh. For example, the life is 4 years. So subsequently the carrying value will become 75,000. Okay, you need to compare the carrying value with the fair value. Okay, for example, carrying value is 75,000 and this revised value is 85,000. So you need to compare with those values. Okay. So how do you do the computation? So let me explain once again. For example, on 1st April 2018, there was an intangible asset for rupees 1 lakh. Okay, the life is 4 years. What is the carrying value on 31st March 18? What is the carrying value? On 31st March 19, what is the carrying value? Kaustav, what will be the carrying value? 1 lakh minus 1 lakh by 4, that is 75,000. 75,000. Okay. So now the company has opted for revaluation model and the fair value on this date is, let's say, 90,000. So in this case, you need to compare with this value and 15,000 here, 15,000 will go to OCI. So in the examination, you need to see until and unless question will tell you, until and unless the question will say you that you have to ignore the competition of depreciation. You should not ignore the competition of depreciation. If it is specifically mentioned in the question, then you can ignore. Otherwise, you need to compute the carrying values at the reporting date with this depreciation part. Okay. So now let's time to have a break. So we'll have a break for 10 minutes. It's exactly 8:41 now. So we'll start at 8:51. friends, let's discuss the next concept of useful life. So in the measurement after recognition, we discussed this revaluation model, we discussed this revaluation surplus, treatment of revaluation surplus, treatment of impairment loss, I mean to say treatment of revaluation loss. Then we discussed treatment of utilization of revaluation surplus. We also discussed treatment of after utilization of revaluation surplus. So we discussed about this how this increase or decrease will happen. Okay, we'll discuss that while utilizing the revaluation surplus, it will go to retained earning. Okay, so while going to retained earning at the time of derecognition, straight away it will go to retained earning. At the time of use of the asset, the excess amount will go to the retained earning. Okay, so now we will be discussing this useful life concept. So what is the useful life and why it is important? Of course, if you are using an intangible asset like a tangible asset, of course you need to amortize this intangible asset over its useful life. For example, the classic example is telecom companies. The telecom companies has spent huge amount on obtaining a spectrum license, on obtaining a telecom license for a period of 10 years or for a period of 20 years, and they are expensing huge cost, like 10,000 crores, 50,000 crores, 20,000 crores. Okay, so whether the company which is incurring this 20,000 crores has to expense of it into the P&L in a one go, answer is no. They have to capitalize this license cost as an intangible asset, because the company is going to have the future economic benefit for the next 20 years by using that particular license. So if the company is using this particular license for the next 20 years, the company is obtaining future economic benefit for the next 20 years, the company should charge the amortization amount, the company should accrue the cost on this intangible asset on a yearly basis. That is known as a amortization. Okay, so every year the company has to charge something on a systematic basis. It could be on a straight line method, it could be on a WDV basis, it could be on a unit of digit method. So these three methods we have learned in India 16 also. So I'll explain again these three methods while discussing this useful life concept. So useful life is generally a contractual life. Useful life is generally a contractual life or a legal life. It is generally a contractual life or a legal life. Okay. But for example, the contractual life is 5 years, but the company is expecting that future economic benefit will receive only for the next 3 years. In that case, useful life may be shorter. Okay, it may be shorter. So in that case, company has to amortize the intangible asset over a period of 3 years. Okay. Now the important concept which I need to discuss here is there are two kinds of useful life as far as Ind AS 38 is concerned. So one is finite life, one is finite or definite. I can say definite also. Finite life. Second is not infinite. Second is not infinite, indefinite life. Indefinite life. Okay. Finite life, indefinite life. Okay. So what is meant by finite life? Finite life means limited period. Limited or specified. Limited or specified period of use. Like license, for example, license for 10 years. So this is finite life. Okay. What is meant by indefinite life? Indefinite life means the company is not able to estimate that the company will get the future economic benefits for how much period. For example, the company has capitalized a brand, the company has capitalized a goodwill. Okay, so the company is not able to estimate that the company will have a future economic benefit which is in future for how many years by using this brand, by using this intellectual property rights, by using this formula of COVID vaccine, by using this patent. The company is not able to estimate that what should be the life of this intangible asset. So in this case, it is known as an indefinite life. So in accounting standard, there is a big difference between accounting standard 26 and Ind AS 38 and IAS 38 in this aspect. Accounting Standard 26 says that if the life of the intangible asset is indefinite, you have to take a rebuttable presumption of 10 years. Okay. So accounting standard says that if you are not able to calculate the life, in that case, you have to take the life for a maximum period of 10 years. Okay. So the life is for a maximum period of 10 years. But here the life could be indefinite. The life could be indefinite. It means the future economic benefit. It means company is not able to foresee. It means not able to foresee about the future economic benefit to be flown by which periods. By which periods. Okay. So not able to foresee about the future economic benefit to be flown by which periods. Is it okay? Now, if it is a finite life, then amortization will be required. It means depreciation will be required because the life is finite. So for example, the life is 10 years for this license. The cost is 1 crore. So 1 crore divided by 10 lakh is the amortization. If there is any scrap value, so that scrap value will be deducted. So for example, scrap value is 10 lakh. So 1 crore minus 10 is equal to 90 lakh. 90 lakh divided by 10, 9 lakh will be the amortization. In this case, since the life is not known, can you calculate the amortization? If the life is not known, can you calculate the amortization? If life is not known, can you calculate the amortization? Yes or no? You cannot calculate the amortization. In this case, there is a requirement of mandatory impairment testing. There is a requirement of mandatory impairment testing. At the end of every year. Mandatory impairment testing at the end of every year. Okay. Right, Ambika, Pujita, Kaustav, Rohan, Varun, Shreyans, Swati, Dinesh. Is it okay? Any doubt here? Any doubt? Guys, any doubt here? Regarding the useful life, it could be finite, it could be indefinite. In case of finite life, you have to calculate the amortization. In case of indefinite life, you have to do the impairment testing on a mandatory basis. Okay. Any problem here? Now, what is amortization? What is amortization? What is meant by amortization? So we understood here. So what is amortization? Amortization is nothing. It's a systematic allocation. It's a systematic allocation of amortized amount of intangible assets over its useful life. So amortization is equal to cost minus scrap value divided by useful life. Amortization is equal to cost minus scrap value divided by useful life. Okay. So when amortization will begin? So amortization will start when the asset is available for use. Please remember, I have told in Ind AS 16 also, property, plant and equipment also, the concept is not put to use. The concept is available for use. Okay. So amortization begin. So this is the formula of amortization. Now amortization begin. Amortization start when the asset is available for use. So amortization start when asset is available for use. Okay. Understood? So when the amortization ends, tell me, when the amortization ends, when you are required to stop the amortization, when the asset reach to the amortized amount, when the asset reach to the scrap value. Okay, for example, 1 crore was the cost, 10 lakh is the scrap value, life is 10 years. Okay, so 1 crore minus 10 divided by 10 is equal to 9 lakh to be charged every year. So at the end of the 10th year, the balance, the net block of the intangible asset is equal to the scrap value, which is 10 lakh. So at that point of time, amortization is required to be stopped, or amortization is required to be stopped when the asset is derecognized, when the asset is disposed of, or amortization is required to be stopped when the asset is classified as held for sale in accordance with Ind AS 105. Same concept I have explained in PPE also, property, plant and equipment also. So the amortization will stop in 3 cases. First, when the net value, when the net block of the asset is equal to the scrap value or realizable value. Second, when the asset is derecognized. Third, when the asset is classified as held for sale in accordance with Ind AS 105. Okay. So now, quickly I'll move to my screen, my PowerPoint presentation. Then I'll start discussing the next concept. So useful life of an intangible asset. It could be a finite life, it could be indefinite life. Finite life means limited period of benefit to the entity. In that case, amortization is required. Indefinite life means no foreseeable limit to the period over which asset is expected to generate cash flow to the entity. In that case, amortization is not required. Mandatory impairment testing is required. Okay. So amortization, what is the meaning of amortization? What is the meaning of amortization? The meaning of amortization is allocation of the depreciable amount of an intangible asset with a finite useful life on a systematic basis over its useful life. When it will begin, when the asset is available for use, when it ceases earlier of the date when asset is classified as held for sale, or when asset is derecognized, or when the asset reaches to the scrap value or realizable value. So Ambika has a question. So Purushottam is, first of all, there is a question by Purushottam. Sir, what is the difference between depreciation and amortization? Technically, Purushottam, there is no difference. There are 3 words: depreciation, amortization, depletion. Depreciation is used for tangible asset. Amortization is used for intangible asset, and depletion is used for mining assets. Okay. Ambika is asking, sir, in case of indefinite life, it does not satisfy initial recognition condition that the company cannot estimate future economic benefit, then it should not be recognition in books of accounts. Okay, in BOA. So Ambika, BOA also stands for Bank of America. Okay. So guys, just understood. So I'm not saying that the future economic benefit is not probable. When you are recognizing an item as an asset, you need to see 2 conditions. Whether cost can be measured reliably, answer is yes. Whether future economic benefit is probable, answer is yes. But we are not able to estimate till how many years this future economic benefit is going to be received by the company. Till how many years? Okay. So in case of a license, we are aware that the future economic benefit is to the limited of 10 years or 20 years. But in this case, we are not aware, we are not able to estimate by way of brand, goodwill, intellectual property rights, patent, formula. So we will receive FEB, future economic benefit, to the extent of how many years. We are not saying that future economic benefit will not be received. We are certain that it will be received, but we are not certain about the period till which it will be received. So in that case, it will be considered as an indefinite life, and amortization may not be calculated because denominator is not there. So every year impairment testing is required, every year. Okay. So whenever you will do a impairment testing, what will you do technically? You will calculate recoverable amount. So whenever you will calculate the recoverable amount, what you will do? You will calculate value in use. What is the present value of future cash flow? So every year you need to re-estimate. Once you are able to conclude, yes, for example, after 2 years, you are able to conclude that I'll receive the future economic benefit only for the next 5 years. In that case, this indefinite becomes finite. Okay. Ambika, is it okay? So after that point of time, after 2 years, when the company is able to certain the life of the intangible asset, after that it will become a finite life intangible asset, and the depreciation or amortization will start on that particular intangible asset. Sir, if the amortization will start, then we are not required to do any impairment testing? It is required again. It is required again if the recoverable value is lower than the carrying value. Okay. But sir, in case of indefinite life, since you cannot calculate the depreciation or amortization because life is not known, so there is a mandatory impairment testing. There is a mandatory impairment testing. Okay. Yes, Ambika, you are right. So you can quantify, but you cannot quantify the life. Okay. You cannot quantify the life by how many years. We are saying that future economic benefit will be received. Okay. But for how many period, we are not certain. Okay, guys. Now coming to the amortization method. Now, what are the amortization method? So what is this amortization method? Amortization method, same method which we have discussed in day 16. What are the three methods of depreciation or amortization? So what is this amortization? It is nothing. It shows the consumption pattern. It shows the consumption pattern of asset. So there are three method of amortization. What are the three method of amortization? What are the three method of amortization? Ambika, Costa, what are the three method of amortization? Straight line method, SLM, WDV, unit of production. SLM, WDV, unit of production. What is the SLM method? Means constant amortization. If the company is able to ascertain that the consumption pattern of the asset will be constant, it means the amortization will always be constant. So this is known as a SLM method. Okay. If the company is able to ascertain that, what is meant by WDV, written down value method, that higher consumption in initial years, in initial years, and then it goes down. So in that case, WDV method is more appropriate. Here the amortization will be on decreasing trend. Amortization will be on decreasing trend because the consumption, the company is estimating the asset is getting consumed in the decreasing trend, and hence the amortization or depreciation is in decreasing trend. What is unit of production? It is on the basis of units produced. For example, the company has capitalized a technical process. The company was evaluating a process to reduce cost of the production. Okay, and the company has evaluated the technical process, and the company has identified that this technical process will help me in saving my cost of production to the extent of 1 lakh hours. To the extent of 1 lakh hours of production. You know, in the factories, the production will happen in the 3 shift or 2 shift. So the labor is changing in every shift. Okay. So for example, in the first year, the production was done for 10,000 hours. Okay. So in that case, this intangible asset has to be depreciated into 10,000 divided by 1 lakh. In the next year, 15,000 hours production have been done in the factory. So this intangible asset multiplied by 15,000 divided by 1 lakh. This is known as a unit of production unit or diesel method. Okay, you remember I have taken an example of projector which is into the lamp hours. So the life of the projector is 30,000 lamp hours. Okay, have you understood this? Guys, are you clear on this? So amortization method may be diminishing balance, straight line method, unit of production method. The amortization method used shall reflect the pattern in which the asset's future economic benefit are expected to be consumed by the entity. If pattern cannot be determined reliably, straight line method shall be used. The amortization charge for each period shall be recognized in profit or loss unless this or another standard permits or requires it to be included in the carrying amount of another asset, which is say PPE or inventory. For example, if an intangible asset is used in the construction or development of a property, plant and equipment, or development of an inventory, in that case such amortization asset will be part of the cost of the inventory or cost of the property, plant and equipment. Okay, the amortization period and amortization method. Even in PPE, I have told you useful life and method of depreciation, residual value has to be reviewed at least at each financial year end. So three things: useful life, it will change your depreciation or amortization; your residual value, again it will change your depreciation or amortization; and your method of depreciation, again it will change your depreciation or amortization. These three items are required to be reviewed at least once in a financial year, which is at least at each financial year end. Okay, if the expected useful life of the asset is different from the previous estimate, then the amortization period shall be changed accordingly. And whether this will be a change in policy or change in estimate, you all have already completed Ind AS 8. You all have already had a class on Ind AS 8. So whether the change in depreciation method, change in useful life, change in residual value, these three change will tantamount as a change in policy or change in estimate. This will be considered as a change in estimate. Yes, you're right, Rohan. This will be change in estimate. Okay, and it shall be applied prospectively or retrospectively. Swati is saying it will be prospectively. Yes, Swati, you're right. So change in estimate has to be applied prospectively. Like we have seen in case of a revaluation. So we are calculating the amortization or depreciation on the revised amount. Okay, when the life is changing, we are calculating depreciation or amortization on the revised life. Okay, so whatever the carrying value is there as on date, then that carrying value has to be depreciated or amortized over the useful life. Okay, great, guys. Purushottam, cash is also a monetary asset. Yes, let's do illustration number 11. Very important illustration for the sake of understanding of this concept. Illustration number 11 of study material. X Limited engaged in the business of manufacturing fertilizers entered into a technical collaboration agreement with a foreign company, Y Limited. Okay, so X Limited is in the business of fertilizers and X Limited has entered into a technical collaboration agreement with a foreign company, Y Limited. As a result, Y Limited would provide the technical know-how enabling X Limited to manufacture fertilizer in a more efficient way. X Limited paid rupees 10 crore for the use of know-how for a period of 5 years. X Limited estimates the production of fertilizer as follows: 50,000, 70,000, 1 lakh, 1 lakh 20,000, 1 lakh 10,000. Okay. So these are the estimates of production over a period of the next 5 years. For this technical know-how, for getting this technical formula, technical process, X Limited has paid 10 crores. Okay, and the know-how will be used for a period of 5 years, and the company is estimating the production in the tune of 1, 2, 3, 4, 5, 50,000, 70,000, 120, 110 metric tons. At the end of the first year, it achieved its targeted production, and at the end of first year, the production was 50,000 metric ton. At the end of second year, 65,000 ton of fertilizer was being manufactured, and X Limited considered to revise the estimate for the next 3 years. The revised figures are 85, 1,05,000, 1,15,000 metric tons for the year 3, 4, and 5 respectively. How will X Limited amortize the technical know-how fees as per Ind AS 38? Okay. So first of all, tell me which method of depreciation, which method of amortization should be used here. Can we apply straight line method? Can we apply WDV method, or we should apply unit of digit method or unit of production method? Friends, tell me which method should be applicable here, and how this impact needs to be taken in the books of accounts. Retrospective, prospective, revision, no revision, what is required here? Okay. Students are saying, sir, in this case, unit of production should be applicable because the company is getting a technical know-how, this technical formula for a production processes, and production processes and the production units are volatile. So it's better to go for the best method, which is unit of production method. Yes, you're right. So friends, what is the cost of intangible asset? What is the cost of intangible asset? It's 10 crore. 100 lakhs. Okay, 10 crore. What is the estimates? What is the original estimate? This is year 1, 2, 3, 4, 5. What is the original estimate? Original estimate. So original estimate at the end of the first year, at the beginning, original estimate was 50,000, 70,000, 1 lakh, then 1,20,000, then 1,10,000. So what is the total here? So 50, 70, 120, 120 and 220, 220, 320, 420 and 4,50,000. So what is the total here? The total is 4,50,000 metric tons. Okay. What is the revised estimate? What is the revised estimate at the end of second year? Sorry, at the end of first year, what is the revised estimate? So at the end of first year, the actual production was 50,000 only. And it is written that at the end of the first year, the company has achieved the targeted operation or production. At the end of second year, 65,000 metric ton of fertilizer was being manufactured. Okay. So at the end of the first year, the position was same. At the end of the first year, the position was the same. So 50,000, 70,000, again, same 70,000, 1 lakh, 120 and 1,10,000. 1,10,000. So total is 4,50,000. Now revise estimate at the end of second year. Revise estimate at the end of second year. Second year. What is the revised estimate at the end of second year? So first year it was 50,000 which have been gone. Second year it achieved only 65,000, and the company has revised the future year estimation, which is at 85, 15 and 115. 85,000, 1,05,000 and 1,15,000, which is the total is how much? So 115 plus 105, 220, 220 and 83 lakh, 3 lakh, 3 lakh 5,000, 3 lakh 70,000, 4 lakh 20,000. So 4 lakh 20,000. Okay. So these are the revised estimates. Now we need to discuss what is the revised, what is the depreciation or amortization at the end of every year. Okay. So at the end of the first year, should I write here? Oh, just a minute. So let me have some space here. So this is year 1, 2, 3, 4, 5. So first of all, what is the depreciation? What is the depreciation at the end of the first year? I mean to say amortization. What is the amortization at the end of first year? 1 lakh, sorry, not 1 lakh, 10 crore. 10 crore multiply by how much? 50,000. 50,000 unit of production were there. Divide by 4,50,000. So what is the answer? What is the answer? 10 crore, 10, 00, 00, 000. Okay. Multiply by 5, divide by 45. Is it correct? Divide by 45. So how much is there? So it is 1 crore 11 lakh 11,000. 1 crore 11 lakh 11,111. Okay. So this is 1 crore 11,000. 1 crore 11 lakh 11,111. Okay. So this is 1111111. So what is the carrying value? What is the carrying value as on this date? What is the carrying value? The carrying value is 10 crore minus 1.11 crore. The carrying value is 8.89 crore. The carrying value is 8. So sorry, it was not 1 crore, it was 10 crore. Sorry, it was 100 lakhs, which is 10 crore, and here it is 1 crore. So 8.89 crores. 8.89 crores is the carrying value. Now in the second year, what will be the depreciation? In the second year, what will be the depreciation? At the end of the second year, what will be the depreciation? The depreciation will be 8.89. 8.89. So amortization at the end of second year. At second year end. First of all, what is the life? Sorry, what is the carrying value? Carrying value is 8.89 multiply by how much unit have been produced in the second year? In the second year, 65,000 units have been produced. 65,000. And out of how many unit? 8.89 out of how many unit? So you need to have a total of all these. You need to have a total of all these. Okay, because you have to apply the change prospective. So 65,000 have been produced in the second year, and what is the total of second, third, fourth, and fifth year? So 115 plus 15, 220, 220, 83 lakh, 3 lakh 70,000, 3 lakh 70,000. So 8.89 multiply by 65 divided by 370. So this is coming at 1.56 crore. This is coming at 1.56 crore is equal to 1.56 crore. So what is the carrying value at the end of the second year? 8.89 minus 1.56. 8.89 minus 1.56. 7.33 crores. Okay. So what we have done? We have calculated the carrying value at the end of the first year, which will become opening balance for the second year. Okay. And whatever unit have been produced actually in the second year, so we have charged amortization on this basis divided by the total of the 4 years. Okay. So this has to be applied prospectively. Any doubt? Any doubt here? Great. Yes, Pujita, you're right. Ambika, Costa, Vevavi. Guys, you all are right. Yes. So friends, solution is also given in this PPT. Based on the above data, it may be suitable for X Limited to use unit of production method for amortization of technical know-how intangible asset. The total estimated unit to be produced is 4,50,000. So 10 is missing in this solution. So the correct one is 4,50,000 metric ton. The technical know-how will be amortized on the basis of the ratio of yearly production to total production. The first year charge should be a proportion of 50,000 by 4,50,000 on 10 crore, which is 1.11 crore. At the end of second year, as per revised estimate, the total number of units to be produced in future are 3,70,000 metric ton, 65, 85, 1,05, 115. Okay. So the amortization for second year will be 65 divided by 370. That is 1.56 crore, and so on for the remaining years, unless the estimates are again revised. Okay. Is it okay, guys? So we have already talked about this intangible asset with an indefinite useful life. It shall not be amortized because the denominator is not known. An entity is required to test for impairment by comparing its recoverable amount with its carrying amount annually, or whenever there is an indication that the intangible asset may be impaired. Okay. So first of all, I have told you, for intangible asset with indefinite life, there is a mandatory annual impairment testing. But if there is an indicator that this intangible asset may be impaired, so the frequency could be more than a year also. More than a year means more than within a year, it should be tested for impairment, could be 2 times, 3 times, okay, depending on the indicator of impairment. Thank you, Vansika, my pleasure, and thanks for the appreciation. So guys, everything is clear so far? Any doubt regarding this prospective application, finite life, indefinite life, amortization method, change in amortization method, change in estimate, change in policy? Any doubt so far? Okay, so let's come to the last concept technically on this intangible asset retirement and disposal. Same slide. So let me tell you my thing. So I have copied the same slide from PPE, from investment property, and into intangible asset. Same slide. So what is that? When an intangible asset is derecognized. Vanshika, when an intangible asset is derecognized. Purushottam, when an intangible asset is derecognized, tell me. Purushottam, don't worry, I'll give your answer. Actually, your answer is not from the respective standard. So you join the session in between and you start asking the question from the earlier standard, from the other standard. So the momentum of the class may be break. So that is why, don't worry, I'll answer your question. I have already answered one of the question, your monetary assets and cash. So whatever question you have, please ask me after 10 minutes. Okay. First of all, let me finish the intangible asset standard. Some of the question may be answered if you have joined the session from beginning. Okay, so guys, I'm asking when the intangible asset is when the intangible asset should be derecognized. When the intangible asset should be derecognized. The intangible asset shall be derecognized in two cases. When it is disposed of, am I right? So for example, the company has sold the intangible asset. Of course, since the company has sold the intangible asset, it has to be recognized. It has to be derecognized. So now the time has come for derecognition. When the company has disposed of. When the company has disposed of. When the company has disposed of the intangible asset. Second, same. Please remember, Ind AS 16 and Ind AS 40. Please remember. So wonderful, Pujita. Pujita has done the complete illustration number 11 and calculated the carrying value at the end of third year, fourth year, fifth year also. Okay. So Kaustav is saying intangible assets are derecognized when sold or when no future economic benefit is expected. Pujita is also saying when sold or when disposed of. Nanda is saying on disposal or on no future economic benefit. Ambika is saying on disposal. Great guys, yes. So one, when it is disposed of. The second, when future economic benefit is not expected. When future economic benefit is not expected. For example, the company has launched a COVID vaccine. And after 4 years, the company has estimated now, according to the environment or according to the weather, the COVID virus cannot be spreaded. Okay. So technically the company is estimating now we will not have any future economic benefit. For example, after 4 years or 5 years. At that point of time, when the company is not expecting any future economic benefit, in that case, it is required to be derecognized. Or the company has already established a technical know-how or a production process. The company has created a production process due to which the efficiency was arising. Okay, the productivity was increasing. So after 5 years, the product which the company was producing or the way by which the company was producing, that is not relevant anymore. That is not relevant anymore. For example, the company was using the technology for production of diesel cars. And now the diesel cars have been banned by the government. So government is saying either you have to manufacture a CNG car or electrical vehicle. Okay. So in that case, whatever the technology which was related to production of diesel cars, so now this technology will not more be relevant and the company is not expecting any future economic benefit. So such intangible asset is required to be derecognized from the books of accounts. So whatever carrying value of that intangible asset was there, that has to be derecognized and charged to P&L. Understood? Is it okay? Friends, is it okay? Okay. So at the time of derecognition, if there is any gain or loss, that will go to P&L. That will go to P&L. If there is a gain, it is other income. If there is expense, it is other expense. If there is a loss, it is other expense. If there is a gain, it is other income. Okay. Friends, is it okay? Let me know if you have any doubt. So technically, we have completed entire concept of Ind AS 38. So now I am solving a case study. So let me take you through a case study. So go to page number 7.317. Go to page number 7.317. Okay. So let me open that institute study material for the benefit of larger students. I hope it is visible to you guys. I hope the study material is visible to you guys. So this is from Test Your Knowledge, page number 7.317. So Costa, you are saying, can you please explain the concept of disposal of intangible asset by way of donation? Does this concept apply to India 16 also? Yes. So Costa, the thing is, the company has decided to donate. For example, the company was having an intangible asset, or the company was having a building or a machinery. And after 5 years, the company has decided to donate this particular asset or this particular building. Okay. So in this case, the company needs to de-recognize that asset from the books of accounts, because the company will not receive any future economic benefit, and the company is donating that asset free of cost. So the whatever carrying value of the asset was there, that carrying value has to be credited, and donation expense needs to be debited. Okay, so it will be a donation expense in the P&L. Is it okay, Costa? I hope this replies your query. Guys, please confirm if you are able to see the study material on the screen. And it is page number 7.317. Test your knowledge. Question number 1 is, X Limited is engaged in the business of publishing journals. They acquired 50% stake in Y Limited. Okay, so it's a case of business acquisition. So this is a company in the same industry. X Limited paid purchase consideration of rupees 10 crore and fair value of net assets is 8.5 crore. Okay, so fair value of net assets is 8.5 crore and the total consideration is 10 crores. And the above purchase consideration also includes 30 lakh for obtaining the skilled staff of Y Limited, because Y Limited has a superb staff. So the Y Limited staff is a very experienced in nature. So they have done the Ind AS training, GST training, IFRS training. So they have done a lot of trainings. So they are very capable. They are very efficient. So that is why X Limited is paying extra on account of 30 lakh rupees on account of skilled staff. X Limited is paying 50 lakh by way of payment towards non-compete fee, so as to restrict Y Limited to compete in the same line of business for the next 5 years. So X Limited is also paying 50 lakh extra so that Y Limited cannot operate in the same line of business for the next 5 years. If you remember, when Mr. Mukesh Ambani and Mr. Anil Ambani got separated, when this Reliance group got separated, so they have entered into an agreement that Mr. Mukesh Ambani will not come into the business of Mr. Anil Ambani for a period of, let's say, 10 years, 5 years or 15 years. Okay. So Anil Ambani got a telecom segment, which is Reliance Communications. Okay. So they got separated somewhere in 2000, 2001 or somewhere in 2002. So I'm not able to recall exactly. If you will see, Mr. Mukesh Ambani came into the telecom segment, which is Reliance Jio, after a period of 10-15 years. Okay, why? Because they have a non-compete agreement. And by way of a non-compete agreement, one can enjoy the future economic benefit from a particular product or a particular market, and one can restrict other to access those market, those product or those future economic benefit. So friends, in this particular case, let me go to the whiteboard. In this particular case, this is a case of business combination. So in this particular case, the total payment is 10 crore. The total purchase consideration, is 10 crore. Okay. And fair value of net assets is 8.5 crore. Okay. And this non-compete fee is required to be recognized as an intangible assets, which is 0.5 crore. This is 8.5 crore. This is 0.5 crore. And this 30 lakh, 0.3 crore. 30 lakh will charge to P&L because it is not an identifiable resource. It will be charged to P&L. So 8.5 plus 0.59 crore. The remaining 1 crore will go to goodwill. The remaining 1 crore will go to goodwill. Okay. Understood? Is it okay? So if you go to the solution, it says that X Limited should recognize an intangible asset in respect of consideration paid towards non-compete fee. However, amount paid for obtaining skilled staff amounting to rupees 30 lakh does not meet the definition of intangible asset since X Limited has not established any right over the resource and should be expensed off. The entity has insufficient control over the expected future economic benefit arising from a skilled staff. Therefore, 50 lakh will be separately recognized as an intangible asset, whereas amount paid for obtaining skilled staff does not meet the recognition criteria. However, since it is acquired in a business combination, it forms part of the goodwill recognized at the acquisition date. And what is the goodwill? Goodwill is 1 crore. Okay. So Vaibhavi is saying, sir, skilled staff expense not to be recognized as intangible asset and should be expensed off, and non-compete fee considered as intangible asset as it meets the definition of intangible asset. Yes, Vaibhavi, you are right. Okay. So guys, let's look at the another question. Question number 5. Question number 5. Are you able to see the screen? Question number 5. X Limited has acquired a telecom license from government to operate mobile telephony in 2 states of India. Can the cost of acquisition be capitalized as an intangible asset under Ind AS 38? Purushottam, I would request you to please raise your question. Whatever question you are having, please post your question so that I'll able to respond after taking this question. So KX Limited has acquired a telecom license from government to operate mobile telephony in 2 states. Can the cost of acquisition be capitalized as an intangible asset under Ind AS 38? Yes, of course. This has to be capitalized as a license cost. This has to be capitalized as a cost of intangible asset. Okay, because it is meeting the criteria of identifiability, future economic benefit, control is there. So this has to be capitalized as an intangible asset. Okay. So guys, please let me know if you have any question from Ind AS 38. So it's a Maggie time. It's a Maggie time. So before moving to Maggie time, Purushottam has a question. Sir, if the company using SAP ERP software on fixed monthly rental basis for login credentials for more than 1,000 employees, how this cost can be capitalized and amortized for how many useful lives? Purushottam. So just we need to understand if the arrangement is on a rental basis. Okay. If the arrangement is on rental basis, so every month company is paying rent for that. So in that case, it will be considered as a right of use asset. Okay. So you need to see if you are acquiring any asset and you are paying a rent, then it will not be capitalized as an intangible asset. It will be capitalized as a right of use asset in accordance with Ind AS 116. Okay. And that right of use asset has to be amortized over a lease term. Okay. And that right of use asset will be present value of future lease rental. Okay. So you have to debit right of use asset, you have to credit rental obligation. And this right of use asset has to be depreciated over a lease term, let's say 3 years, 4 years, 5 years. Leasehold obligation has to be accredited with the interest component so whatever installment you are paying as a rental, so that will be knocked off from the leasehold obligation, and at the end of the lease term it will become 0. So you will learn the concept in detail while reading Ind AS 116. So Purushottam, I hope this answers your question. Vaibhavi is asking, sir, will service concession arrangement be intangible asset? Vaibhavi, the concept of service, the accounting of service concession arrangement has been covered in Ind AS 115. Okay. Appendix B and C or Appendix C and D talks about accounting treatment of service concession arrangement. So what is service concession arrangement? For example, government has given government has given a project to a private company, which is A Limited, okay, to develop a highway. So you have seen all these highways. So whenever you go to highway, there is a toll plaza, and when you read the name of the company on the toll plaza, so you may read that it is ABC Highways Private Limited. Okay, so it is a private party who has developed that highway, and he is collecting toll as a revenue. Okay, so government has told that company that please develop this highway. So for developing this highway, he will have a cost of rupees, let's say 100 crores. Okay, so government told him that you can collect the toll revenue over a period of next 20 years, and after 20 years you can refund me this all arrangement as it is in the workable condition. Okay, so this could be an intangible asset, this could be a financial asset, it will depend upon the arrangement. So when you read appendix C of Ind AS 115, it says that if government has given you a right to collect, in that case it will be considered as an intangible asset. But if government has not given you a complete right to collect, I mean to say whatever money you will be collected, that is yours money. Okay, for example, you are collecting 10 crore rupees in a day, so that 10 crore belongs to you. But if the government has fixed the amount that we are providing you a right to collect the money, but every day whatever you will collect more than 1 crore, that will belongs to us. If you will collect less than 1 crore, we will compensate you. If you will collect more than 1 crore, you have to refund us. Okay, if this is the arrangement, then it will be a financial asset. So Vaibhavi, I hope I have replied your query. Purushottam, sir, can we say monetary assets equals to only cash? Purushottam, we cannot say monetary assets equals only to cash. Monetary assets means cash, bank, fixed deposits, trade receivables, loans receivables. So whatever which is realized into cash. So whatever item which can be realized into fixed unit of cash is known as a monetary assets. Okay, which has to be realized or has to be converted into fixed unit of cash is known as a monetary asset. Okay, any query? Purushottam, Kaustav, Ambika, Vaibhavi, let me know if you have any query. If you don't have any query, then I may have a Maggie time now. I will have a Maggie time now. What is this Maggie time? So in 2 minutes or 3 minutes, we'll quickly recap the entire Ind AS 38. So Ambika, Pujita, Kaustav, when we have started with the objective of the standard. Okay. Then we discussed the scope part of the standard. Then we discussed the definition of intangible asset. What is the definition of intangible asset? Non-monetary asset, identifiable non-monetary asset without having physical substance. Then we discussed 3 criteria: identifiable, which is separable or arises from legal or contractual rights. Then we discussed control criteria. An employee cannot be controlled. So if you are providing a training cost to the employee, this cannot be treated as an intangible asset. Future economic benefit, we have discussed that part also. Then the 4th point which we have discussed is initial recognition. So recognition part, an item has to be recognized as intangible asset if future economic benefit is probable or cost can be measured reliably. Okay, so it should meet the definition of intangible asset also. 3 conditions are there. It should meet the definition of intangible asset, cost can be measured reliably, or future economic benefit is probable. Then we discussed measurement at recognition. So we discussed measurement at recognition is dependent upon the mode of acquisition. Measurement at recognition will dependent upon the mode of acquisition. So we discussed about the separate acquisition, we discussed about business combination, we discussed about exchange of assets, we discussed about assets by way of government grant, we discussed about internally generated goodwill, we discussed about internally generated intangible asset. So while discussing separate acquisition, we discussed about cost. Cost includes purchase price, import duty, non-refundable taxes minus trade discount and rebates, plus if there is any directly attributable cost that has to be added. Okay, So what is included in the directly attributable cost? It could be cost of employee benefit, cost of testing, cost of professional fees. What is not included? It is general and administration overhead cost, okay, abnormal cost, initial operating losses, training cost, advertisement cost, promotion cost. These are not included. While coming to internally generated intangible asset, we discussed that internally generated intangible asset has to be capitalized, but before capitalization, you need to demonstrate two phases: research phase, development phase. The research phase expense has to be charged to P&L. Development phase expense needs to be capitalized. Development phase expense needs to be capitalized. Okay. So, but for demonstrating the development phase, you need to demonstrate 6 conditions. What are the 6 conditions? You remember PIRATE? We discussed PIRATE. P-I-R-A-T-E. P stands for probable future economic benefit. I stands for intention to use. R, intention to complete. R stands for resources which are adequate. A stands for ability to use. T stands for technical feasibility. E stands for expenses reliably measured. Guys, are you getting me what I'm saying? So it's a very good time to revise. So this is not a break time, this is a revision time. So we discussed all this part. Then we discussed measurement after recognition. Measurement after recognition. And in measurement after recognition, we discussed cost model or revaluation model. What is the cost model? The carrying value is calculated as per cost minus accumulated amortization minus accumulated impairment losses. In revaluation model, we discussed that revaluation should be as per the class of the asset. If the active market exists, we have to do the revaluation. In case of revaluation, carrying value is revised amount minus subsequent depreciation minus subsequent impairment losses. Okay. So in case of revaluation surplus, it will go to OCI. If there is a subsequent decrease, so OCI need to be adjusted. Over and above, it will go to P&L. So we have discussed all these aspects. Then we discussed the utilization of revaluation surplus. It will go to retained earning. Okay. Then we discussed useful life concept. In useful life concept, we discussed that the useful life could be finite or could be indefinite. If the useful life is finite, so you have to do the amortization. If useful life is indefinite, you have to test for impairment on a mandatory basis. There could be a 3 way of amortization. This SLM, WDV, unit of production method. You need to review the useful life, the amortization method, and scrap value if there is any. So you need to see all this stuff on a regular basis, at least at each financial year end. Okay. So at least at each financial year end. And if there is any change, it will be considered as a change in estimate and it has to be applied prospectively. Then we discuss the derecognition concept. An asset is derecognized if it is disposed of or no future economic benefit is expected. If there is any gain or loss, it will charge to P&L. So this was all about this Ind AS 38 intangible asset. During my 6-hour session, I have done the revision 3 times. So yesterday, I have done the revision in the Maggie time of the last class. Today, when I have started my session, so I have recapped the yesterday's session, and now I have recapped the entire 2 days session. So guys, I hope you are able to understand this Ind AS 38. While doing this Ind AS 38, we have, apart from my own case study, we have also done around 10 case studies, which is from Institute study material. So Purushottam is saying, thank you, sir. I cleared my old doubt with your valuable explanation. Mail ID, if you don't mind. Okay. So Purushottam, my mail ID is caalokgarg@gmail.com, which is there on my PowerPoint presentation also. You can take from there. And if you have any query, you can just write down to me and I'll respond on your query. So Pujita has already explained the meaning of PIRATE. Great, Pujita. So this PIRATE will help you in the examination also. Please remember PIRATE for this development condition. So thank you very much. Thank you for the valuable feedback. And I must say you are a wonderful students and all the best to you guys. And as of now, I haven't received any open query. So I am concluding the session. So Ambika is saying, I always like the Maggie time. So great, Ambika. So this is very important to recap the entire session. Okay. So thank you guys. Thank you very much. Stay safe. Stay happy. Thanks.